Welcome back to the show, everybody. We got a great one for you this morning. It's just some of the things we're going to talk about here is what does cryptocurrency space look like after regulation, more importantly, after Gary Gensler really gets going here. And it's pretty exciting to see what he does. Let's talk about some of the past things he has said and gone over. We'll talk about that. Crypto future, crypto rich, or crypto poor. I think we're going to look at some of the options that we have available to us for all of us early crypto holders, and you might like them. And Chris Larsen from Ripple is now calling for Bitcoin to dump proof of work. Wow, that's a biggie. And you know what? Let's just go ahead and roll this beautiful intro and get into this. Here we go.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here today. Let's go ahead and get into this. A little bit of money coming back into the market. We were below 1.8 this morning for the cryptocurrency market space, or market cap, and now 1.81. So a little bit of money coming back in the market, but it hasn't changed. Everything is still a sea of red, as you can see. Bitcoin off by more than 18% on the 7-day. Ethereum off by 7.6, and coming down to the number 5 spot now as XRP has slipped courtesy of the dereliction of duty intimidation tactics. We are at 34.66% at the number 5 spot at $1.06. Let's look at the range, because we know that the range is very important to watch, as well as the price itself. At $1.06, we're ranging between 102 and 117. We know that we have had it cited by Credible Crypto and others that 90 cent right around $1 range is a very, very critical range, that we could see the retracement of the 0.61 on the Fibonacci. And if we are in fact there, we could see it collect momentum for a week or two potentially, and then watch out. That's what the experts are saying. And believe me, we're all watching. Let's go ahead and get into this, because this first thing comes from Steve Gould-Bronson. Shout out to you and Joni, my friend. XRP reports massive jump in weekly institutional inflows. I did cover this yesterday morning or the day before, but I want to highlight and note for everyone here that while U.S. retailers are handcuffed, generally speaking, thank God for Uphold. Thank God for BitTrue that you can trade into it, not buy it directly. But you have to. Let me tell you what I do with Uphold, because the credit card processing is really, really tough to deal with for me as a U.S. resident. So what I do is I use my Uphold, and I take a asset like XRP or some other asset, some other crypto, and I send it to my BitTrue account. And once it's there, I usually try to make sure that whatever crypto I've sent, it is able to trade directly into the asset or crypto that I'm after. That's what I like to do. That seems pretty seamless, and shout out to Big Skinny on that one. And by the way, shout out to Big Skinny and Lenker, who really provided me, Lenker provided me yesterday with a layout of FLR Finance, which we are going to talk about today, and what that may look like going forward in the future with a Gary Gensler SEC. And I think it's pretty awesome. So we're going to take a look at that in a second as well. But here, I just want to remind everybody, massive institutional buying reported by CoinShares, and that to me is saying a lot of good stuff at my house. Not financial advice, but that's where I'm at. Now here's a big comment by Chris Larsen saying Bitcoin must move away from its core proof of work technology to remain dominant currency. Now that is a hell of a statement. Now let's go ahead and get into that article, because it's right here. And here it says, obviously, proof of work is an algorithm in the blockchain technology used to confirm Bitcoin transactions and produce new blocks on the blockchain. It is an energy-intensive process, and even few transactions on the network can have as much as of a carbon footprint as driving a gas-powered sedan for 1,000 kilometers. It goes on to say Bitcoin running on proof of work algorithm has led it to consume an average 113.8 terawatts per hour, roughly equivalent to energy consumed by 12 million U.S. homes, and release an estimated 63 million tons of CO2 annually. Wow. Look, that's a lot. And I tell you, this isn't just about This is not just about people hating on Bitcoin. Look, I've had Bitcoin, I've held Bitcoin. I recently moved out of that position because of this narrative of the world, the G7, the G20, talk about a green movement, the Bretton Woods, the Great Reset, right? The World Economic Forum, right? Everybody's pushing towards this green movement of, in finance through cross-border transactions and using blockchain and updating everything. So this is a conversation that is obviously, for me, not going away. And it's not going away for this guy either, who is in fact a huge Bitcoin maximalist. I showed this in my video this morning, but Jesse Powell, the CEO of Kraken, obviously a big Bitcoin maxi, also warned that the governments around the world may begin to limit Bitcoin and other cryptocurrencies. Now, that is a big, big signal. Now, look, full disclosure, SEC is suing XRP or Ripple over XRP sales. I want to highlight in this that, look, I'm willing to look at the whole breadth of Ripple and XRP, just like I'm willing to look at the whole side of Bitcoin and the positives and negatives there. That's all I'm trying to do here. So the reality of this is that if, in fact, that Ripple had entered into option contracts for XRP, they may, in fact, be security sales, unregistered security sales. That doesn't mean the asset is a security, but the particular sale, if it is an option contract for that customer, would in fact be a unregistered security. It doesn't mean the end for Ripple, and it wouldn't mean the end for XRP. More than likely, it would just mean a fine, and then everybody's back to work. But we shall see where that goes too. Now let's move to the next thing here, because this is Gary Gensler back in 2018, and I felt like there was a really great exchange between the two people that were interviewing him on Bloomberg and the comments that were made. Let's start right here to get a feel for Gary Gensler and his approach here. Listen.
How relevant will that be to then help form regulation? Like, what's the feedback loop for that?
Well, I think to the extent that the international regulators can assure for more confidence, that the viewers of this program can say, all right, I'm comfortable, I can do this.
Okay, so now you just talked about international regulators. That's what he said. Well, really quickly, I just want to take you to this and listen to Christine Lagarde said in January of 21, not 2018 like him. Listen.
And there has to be regulations, and this has to be applied and agreed upon. It's a matter that needs to be agreed at a global level, because if there is an escape, that escape will be used. So I think it needs to be if anything, it shows that global cooperation, multilateral action is absolutely needed, whether it's initiated by the G7, moved into the G20, and then enlarged. But it's something that needs to be addressed, and FATF is clearly an organization that has expanded in that respect.
Well, there you have it. And FATF is the Financial Action Task Force that released the guidance to accept know your customer and anti-money laundering, and the travel rule, which says anything over a low amount of money, I think it was $3,000, should be reveal the sender and receiver information along with that transaction. Now, that came from these two people from 2018 to 21 from Christine Lagarde just a few months ago. And here we have him back in 2018, very much aligning 3 years ago with what is actually unfolding right now. Let's keep listening to this.
And big asset managers can invest, you'll see more potential adoption.
So just really quickly to sum up, because we cut out of that comment, international regulation, and then big asset investors feel much more confident coming in. Because why? Because if you have international agreement on these things, then we don't have to worry about some backdoor arbitrage way that the big investor could get hurt or lose, right?
But at the core also, the technology, David, blockchain technology, has to have a place. And right now it's more hype than reality. The largest uses are still quite small. And the technology, I think, is probably 3 years and maybe 5 to 10 years away from really being able to be scaled. Visa moves 25,000 transactions a second. Bitcoin moves 7 to 10 transactions a second. So there.
And just to clear the air here, because that was 3 years ago, in all fairness to him and everyone else listening, Ripple pilots a private ledger for central banks. So obviously he's referencing Bitcoin as the brand awareness poster child to represent all of crypto, but it isn't all of crypto that they're actually talking about now, is it? Because here we are 3 years later, and if we were only doing scale 7 to 10 transactions, they wouldn't even consider having a private ledger for central banks to launch their digital dollars on, now would they? Let's go back to the clip here.
There's still, but I'm an optimist. I think the scaling issues will come.
So assuming we will have the regulation you described, we're sort of like back in 1933 with securities, where should that regulation come? I mean, you're obviously from the CFTC, you believe in the CFTC, but why there rather than the SEC, for example? Or maybe there's an entirely different new regulatory body. I'll
even be regulator neutral as well as technology neutral. I think the pure cash cryptocurrencies like Bitcoin need more protection, and probably more protection than, frankly, even the oil markets or corn and wheat. Whether that's the CFTC or the SEC, I'll be neutral. I think the CFTC has good skills. I think those crypto assets called initial coin offerings, that it's like the old duck test. If it quacks like a duck and waddles like a duck, it's a duck. These things are like initial public offerings.
Okay, now this leans in a little bit to where we are with this case right here that you might be familiar with, which again is the SEC. And again, what he's leaning into here is that initial coin offerings are what? They're essentially when you do fundraising like you would to go public with a company, but you're doing it through a token and tokenization, right, on a blockchain. And he's saying those initial coin offerings are in fact a security. Right? And that's the way they need to be registered and launched. Now, what's interesting again is that from Gary Gensler's words, I think we can assume, and the fact that one of the first orders of business was to not stop or drop the case with the SEC against Ripple and XRP sales. It is, in fact, in his mind, I believe that he firmly believes that the sales from Ripple to their direct customers were, in fact, unregistered securities. And in his eyes, I don't feel, even though OpenCoin was a business before Ripple was created, he doesn't feel that that plays a strong enough role in his eyes. And I, paraphrasing to the comments I've evaluated of Gary Gensler very closely since we found out he would be in this spot, and I think he could be great for this space, but it just reveals to me that he sees, in fact, that this space and the sales from Ripple of XRP to their direct clients over the counter, OTC, are in fact unregistered securities. And I believe he sees, even regardless that the XRP was pre-allocated and gifted to Ripple from OpenCoin, I believe he in fact still sees that process much like an ICO. And that's why I believe the case is continuing to play out today. Now, with that being said, we have to ask ourselves, what does a SEC with Gary Gensler at the helm look like? What does that look like? And that's pretty interesting because we don't know yet. But here in this clip, I want you to listen to this and listen to what is asked and then the comment that is made to Hester Peirce from the SEC about a Gary Gensler SEC. Let's listen here.
Blunt question. Will the Gensler-run SEC be wielding a scalpel or a machete when it comes to regulation of the crypto space?
Well, it is early days still. Chairman Gensler hasn't been in the spot for too many days now. But I think one thing we can expect is that because he is someone who's built a regulatory framework in the past where none existed, and there's definitely a call for a regulatory framework here, I think we can expect that he'll be open to the idea of building something, and I'm hoping to work with him on something.
Now, that's interesting in itself because, obviously he's had, experience in the past of crafting regulation for things, and I don't know what they are, but obviously Hester Peirce is giving him the credit and nod that he has that experience. And for me, understanding that Hester Peirce herself, has proposed a safe harbor rule, I think this really starts to lay a groundwork for startups and companies to come in and operate without the threat of being attacked by a market regulator like the SEC. So we will see what comes out of this, but it is clear, one thing is very clear, they do have a goal to get a unified approach to how to deal with crypto assets, albeit in conjunction with the CFTC and the SEC. Continue to listen here.
Hester, thanks
Charlie?
for joining us. I'm only kidding about the crypto man part on I mean, I barely knew what a cryptocurrency was until a couple of weeks ago. But to be frank, I know a lot of major hedge fund guys that are in this deep. They're worried about regulation, and they keep hearing that it's not necessarily going to start with the SEC, but it's going to start with Treasury. And as a matter of fact, when we asked Jen Psaki, the President Biden's press secretary, about crypto regulation, he pointed us to the Treasury Department. So clearly something is happening from Treasury. Is that your understanding, that it's Treasury that's going to give you guys the rules of the road going forward?
That is an incredible, incredible comment to Hester Peirce, for which she really doesn't answer in this clip. But the reality is they were directed to the Treasury from Charles Gasparino and the mainstream news team there to the Treasury by the press secretary of the president's administration. Yeah, that's a very, very interesting thing, because then that starts to lean into me that, hey, before we move forward as the SEC, let's go see the prudential regulator that oversees the macro of all of these things and find out where they are on this issue as to what is money and or a convertible virtual currency, not legal tender status money that could compete with government fiat money, because that dog don't hunt. And let's find out where they sit on this issue, and then we can begin to move forward from there. That's how I read that. Okay? Now, let's switch to Flare Finance, because Flare Finance is a decentralized platform, and it has made a lot of waves of lately about all the progress they have made and about tax implications, right? And if there's one thing we know, we still don't know what the tax implications are. Now, I want to be very clear about something here, because I think it's very important that we keep a very open, free dialogue on the things that we do not know. And it's okay to not know them. And it's okay to ask the questions, right? And it doesn't mean that it's anything bad because I'm concerned about my portfolio and I want to ask about taxes. But we can't speak to one another like, hey, I know something you don't, just hang on. That dog don't hunt either. We're very grown men out here in this world, and women that have very real money invested in things. And by the way, we are not even electing to receive these things. The platforms that I was on are just simply awarding me with Spark tokens. Maybe that issue becomes something that should be an elect in or elect out of on each exchange by every participant. In that way, you have a choice to accept them. But because the drop is going to be broken up in different installments, it begs the question about what the tax implication may or may not be about these things. And I think it's okay to ask them. And it's okay if Hugo, who is amazing, and Flare Networks, who is amazing, and I think they're going to do amazing things. And in about 3 seconds, we're going to take a look at what they've laid out. And it looks brilliant to me. Brilliant. But at the same time, as an investor, I need to know and understand as soon as possible what the implication will be for me for accepting these Spark tokens. And it is not acceptable for anyone to try to shut me down that says I have the answer, and yet they don't want to give it to me officially. Because the reality is I know what the answer is on the XRP that I bought. I know what the answer is on the Bitcoin I bought. I know what the answer is on the Stellar I bought. And so on and so on and so on. And I need to know the answer on this. And not because I'm not excited about it, but because I'm very excited about it. And I want to understand what the implications are. So shout out to Hugo, shout out to FLR Networks and everybody else involved that supports it. But we all collectively, I think, need to support one another in elevating this question and to get the clarity that we need as soon as possible, because this is supposed to launch sometime soon. I think we're looking, it's June, give or take 2 to 4 weeks, they're saying here. And that to me is pretty exciting. But let's take a look at what the FLR Networks have built. Let's take a look at the layout of this. Again, shout out to Steve Lenker for this, and shout out to Big Skinny. I had a great sit down with them. We looked at this chart. He has an amazing layout of this himself. And just look at some of the things that start with. This is the ecosystem, FLR Finance ecosystem overview. Now, this is the FLR Finance overview, right? So this is not the network itself. Remember, FLR Networks and FLR Finance are in fact two separate deals, right? And that's great. Just like there's a building, and then there's the businesses that take up the space inside of that building on each floor, right? So that's how I see FLR Finance versus FLR Networks. But look here. They show XRP. I'm not going to go through exactly how all of this breaks down, other than just to show you received XRP, received FLR, right? The Spark token. Here you could be holding, FLR Litecoin, FLR Stellar, FLR Doge, FLR XRP. A lot of people were like, why FLR Doge, right? Because it has been said, even by the creator, it's pretty much the equivalent of a digital pet rock, right? But if there's a liquid enough market for it, there's a liquid enough market for it. But let's just focus on what they built, because as you scroll down through this, it is incredibly impressive. I don't mind saying to you, this is impressive. And they have been working really hard on this. And whether we're talking about FLR Networks, the framework of this thing, or FLR Finance, what we're looking at now, to me, this is pretty damn impressive. And when I think of this, you have the potential to do yield FLR, right? Where you can start to earn on your crypto and lock up your crypto. You obviously have the ability to mint things and do a mess of things. Just look at some of these options here. FLR X, FLR Farm, FLR Loans, FLR Mutual, FLR Wrap, FLR Mine. Look at the potential here. I'm not going to break all these down. I just want to do an overview for this moment, because I believe that this is really starting to take shape, like what could become. I mean, this is like a huge decentralized banking platform, or a Fidelity almost type style platform where you're coming and investing your things. And it's cutting edge. I don't know what to tell you other than, this looks amazing to me. But what I want to do is get down here, because, you can get APY, the cloud, the dynamic distribution contract set up. There's many different ways to lock up crypto in the smart contracts here. And basically, the FLR Finance is helping to bring, smart contract functionality to these assets, right? So that's another huge component here, really, in a fundamental way. So it breaks down distribution here, cycles, things of that nature. But what I want to get down to here is right in this area here. What are bond distributions? Bonded distributions is the period of open price support where holders of Y FLR can bond for B FLR and earn long-term minimum annual percentage yields, which is APY is a compound yield, right? And not just a rate itself. So on there, Y FLR. So to me, when I look at the way this is laid out, and of course I know Lenker and Big Skinny did too, when I start seeing words like bonded and bonds and withdraw Y FLR from bonds at any time if market health is not appropriate, I start coming back to the idea that Gary Gensler broadly has said, or, has really clearly said, not broadly, but clearly has said that he believes that, the fact that digital assets have some small form of utility, and I'm paraphrasing, really doesn't mean that much to him. He sees the majority of digital assets as digital asset securities. And obviously, through the FLR Finance system, you were able to lock up these assets and be able to earn against them. And if these are looked at as like basically dividends on bonds, we could be looking at the potential for a platform that could service all of the tokens that may, in fact, at some point get a digital asset security designation. Doesn't mean XRP necessarily. It doesn't mean all assets either. But some of these might be. And that to me is a pretty good place to start when you talk about getting yields or really dividends and interest returns on things that they are in fact calling bonds. And if you're calling things bonds, bonds are securities. And if they are in fact bonds, then there might be a better way to understand the tax implication on some of these things on FLR Finance outside of what would be the Spark token drop, right? So there is a lot of questions here, but there's a lot of excitement too, because I believe that this really is going to be really big. It's not financial advice, but I do believe this is where finance is going. And this is a great picture and a layout of where it ends up. Now, before we go, I do want to remind people, I just said it a minute ago, but I do want to remind you, they do expect FLR distributions will start when the FLR network goes live. The team is working to make this happen safely as possible. It is dependent on finishing security testing. We expect this at the end of June, plus or minus 2 to 4 weeks. And that is exciting to find that out. And I hope in ahead of that, you know, as Hugo has mentioned here, noted when it comes to the taxing and what the implications are on the Spark token airdrop, he said that he noted and appreciated the thinking on the matter. They will release information on precise distribution mechanics in the next couple of weeks, and together with any analysis that may be appropriate. Now, I'm positive that Hugo and FLR Networks are probably not able to speak to advice to all of us about tax implications, but I do expect them to arrive at some form of clarity and information that does divulge what the implication would be for a 15% drop and 3% thereafter until you're awarded. Some people have floated the idea that there could be 100% of your tokens that will be awarded placed into an individual escrow for you, and then that would be a zero value on the receiving of such asset like Spark, and then unloading them in the 15% and then 3% thereafter until the entire escrow has been awarded to you at the end of the contract. Now, I don't know if that would be the case, but I certainly know that something like that certainly seems like it could certainly work to receive the Spark token at a zero value, so we don't incur some kind of heavy tax burden that we were not expecting, or nor did we elect to have. All right. So that's where we are on this day. Shout out to Hugo. I'm a big fan of FLR Networks and FLR Finance. Remember, they are two separate things. And shout out to Hugo for all the information he's been able to bring us. I know that he's probably liability wise, you know, can only speak to a certain degree on the matter, but we do hope to get the clarity that we need going forward. And I encourage all of us to keep a very open conversation about it, because it's not bad to ask the question, because you have to prepare for taxes in order to understand how it will affect you and your portfolio. That's going to do it for me. Hit the like, subscribe, leave a comment below. Make sure you share with somebody you know. Hit that notification bell so you don't miss a thing. Make sure you check out all the links in the description box and the comment section. They are trusted, vetted links of products and services I use each and every day. I'll catch all of you on the next one.